Good day to everyone. Today I will be sharing my thoughts on Uranium Energy Corp. Now, I think if my guess about the status of this one is correct, I think this may be a bit of a controversial name, but I'm going to give what I see and my thoughts on it, and I hope you enjoy. Okay, for starters, let's look at what we're paying for Uranium Energy Corp. The it's a big junior. Its market cap at the time of me making this slide is 221 million, but fully diluted 281 million. So there's another 60 million there in warrants and options and future shares, which would limit the upside. So basically, this is probably between slightly smaller and slightly bigger than Energy Fuels for a comparison. Now they have their plant built, and that's where the debt comes from, and more cash than that, so that's net zero. And if you look, and again, this is at the valuation at the time of when I made this slide, it might be different by the time this video is viewed. Um, you look at the fully diluted market cap, and if you look at maybe a fair valuation of potentially 10 times cash flow at their production capacity of approximately 4 million pounds, they're currently valued as making about $7.02 per pound above their costs to find the cash flow of what their valuation would be fairly valued right now. So for this market cap, what you're getting, the first thing that I think it's important to point out or look at is what size production. And the answer is initially, it looks like they're targeting 4 million pounds a year. So that's two from the Hobson project, which I'll get to, and about two others from their other projects. And this is US based production, so it would be potentially more valuable than foreign uranium production. I'm half pricing in 232 in this, but just looking at the market cap per pound of production, it is not as low as some other companies, but at the same time, for a collection of ISR projects, this is a fairly decent size production target, and it is importantly in places and mostly already permitted. So that's on the side of already ready to go. So what does that mean? Well, basically, the market is already pricing in either higher uranium or their other assets, which I'll get to later. But it's similar to Cameco in that the market is already thinking that the price of uranium will eventually be higher. So it's going to discount some of that from some names that it sees producing later. I see that here, not as much as for Cameco, but it is visible. Now, that being said, they're not a producer, which is both a good and not a good thing. I would lean more towards good thing because they're not diluting their assets and not making money. But that being said, they still have to get from here into production, which will be a step and will take a few months, maybe a year, depending on the project. ISR is quicker, lower capex. So the market already sees them as a future producer. Now, what are you getting for basically the same price as Energy Fuels? Well, you're getting the Hobson processing plant and the hub and spoke strategy that is going to be going with it, which is a centralized conversion plant and many future deposits that can be in contact with that or use the centralized facility. And you're getting, and here is where I'm sure there's going to be comments, trusted management. that many uh, industry veterans and successful resource investors really like and have taken care of assets. And I'll get more to that later. They also do have a fair cash position, which I think the recent raise was basically calling the top of the uranium move upwards. So, as many people may not like that if they were in the name before, but you can kind of admire the management's timing at least. But this cash position gives them strength, whereas they were looking at 20 million in debt. Look at that going into turning sentiment that could have hurt them more if they hadn't raised the cash. That being said, the raise hurt them, so it's a judgment call. Okay, so the hub and spoke, it is a Texas-based facility. Mainly the Hobson plant is the center of that. It's licensed to 2 million pounds a year, and it's not connected, but close to a number of deposits that are to varying degrees of ready and mapped out and controlled and permitted. So the plan is to connect basically the centralized plant to the deposits that are going into production, process the product, and then sell it. So this it is a fairly unique strategy within the U.S. in the space. Although there are other mills that are centralized, this is slightly different. Um, and they do have expansion potential, and I have heard that they are very excited, although find a management team that's not excited about what they're doing. I still haven't met them. Um, they're excited about expansion potential and exploration in the region, and they think that there's significant potential to discover a lot more uranium within range of the Hobson plant. Okay, so on the subject of management, there's probably going to be some justified pushback on what I'm about to say. The management is trusted by many industry veterans. You look at the KCR fund has shares in this, which is Marin Katusa. You look at Sprott, probably Rick Rule, all shareholders in this. And when I look at what they've done, it makes sense to me. They've been conservative and patient. They've raised money on upswings and haven't been, it's different this time. They've used the bottom of the cycle to build up assets, even though they have issued a significant number of shares. If you look at the share price of UEC compared to many um, other companies within the uranium sector, it's not close. They've managed to not mine themselves to oblivion, not destroy their assets and mine the shareholders. They've issued a lot of shares, but they've kept a lot of the share price value. And from a long-term perspective, I think it's admirable in the market that we've had. Now, I've seen some discussion and some people being less than thrilled about them being unhedged because people are thinking maybe it's not good when the price goes down. That's true. It's good when the price goes up. That's also true. So it kind of depends on your view of the cycle and your view of what is going to happen. In my view, the unhedged strategy is fine for a company that has shown the willingness, like UEC, to cut their production when it's no longer profitable. If you're going to be trying to produce as long as possible, hoping for a price recovery, then it may be dangerous to be unhedged. But if you think that this long cycle might, the bottom of this long cycle might lead to a price spike that would take the price of uranium north of 100, maybe 150, maybe $200, then being unhedged allows you to have a cash flow margin that just keeps expanding and expanding as the price goes up, and your lack of being part of the contracting will, in theory, could increase the buying frenzy of uranium, being a bit of a self-reinforcing prophecy there, but it basically it could lead to the share price going straight up as the uranium price goes straight up, and it not be because of some speculative buying and buying. It would be because the company is increasing its cash on its balance sheet. I also think it would be kind of neglectful for me to not mention that this company is in perfect position if Section 232 comes into effect, because they're not tied into contracts, so all of their production would be free and they'd be able to ride it up all the way as the demand were to increase, in theory. So riding the price of US-based uranium all the way up, because it would go up, the price of the US, if 232 is fully enacted. So this is a 232 play. Is it the highest beta 232 play? Probably not, but it is the non-speculative 232 investment, I'll call it. Now, I believe it would be kind of neglectful to not talk about their titanium dioxide asset in Paraguay. Iron and titanium dioxide. This is a big asset, and it could potentially be worth more than the market cap someday. Now, my theory is that this is starting to be reflected in their price. Now, some might disagree, and some would say that they're getting no value for it. I could respect that. I'm just seeing that if you look this compared to the other uranium things, it seems to me you might be getting less strict uranium bang for your buck, because this also has the titanium dioxide asset. Now, on the flip side, I have seen a uranium source on Twitter talk about this asset being under seizure. I looked for that information. I was unable to find it. That being said, someone seems to think it is. I would be interested in seeing a source if one could be provided. But I think it's worth noting that this is a big asset, which, if it's all fine and maybe spun out someday, could be a serious value creator. Now, UEC does also have some ISR projects that are not connected to or close to the hub and spoke ISR facility. The two main ones in the US include Reno Creek and Anderson, both of which are between 25 and 30 million pounds. And it also has two early exploration ISR projects in Paraguay. So it's not just the hub and spoke that you're getting in terms of uranium production for this company. That being said, it's important to remember that ISR projects don't have, while they don't have high capex, they also don't have big production numbers in general. They're kind of here and there smaller developments. Now, UEC is trying to line things up. They want to begin the bull market ready to go, increase production quickly to 4 million pounds, and without hedging and no big spends needed to issue millions of shares, um, the, then they will be getting their increasing cash flow as the uranium price increases, and that provides outstanding leverage to increase uranium prices. They have a plan, and they think that they will be able to execute this plan, and I think the market thinks so too. So if the uranium rally is big and not just to $50 or 60, if it goes again to $100 and or to 150 or to an inflation just $200, they should be ready to go, and they should have the um, cash flow carry their share price. So in summary, UEC is a trusted management team with a collection of projects that are ready and getting ready to go, and not not getting depleted now. They're using the bottom of the cycle to work on the projects. Now, will it work? Will they be able to ramp up? Will the uranium price go high enough for their unhedged strategy to be effective? That I can't tell you. What I can tell you is some people that are much smarter than myself believe in this company. So that is what Uranium Energy Corp has going for it. So that's it for my thoughts on Uranium Energy Corp. I will get to future requests. I don't have a long list of them right now, but I am also going to be away for the next few weeks. So if you don't hear much from me, that is the reason. I will get back to the videos when I get back, and I look forward to your questions and comments, and I look forward to when uranium finally decides to move. But I am perfectly happy if it goes nowhere for a year. I'm thrilled with that. So I hope you are too. So I hope you enjoyed. I eagerly awaiting messages, quests, and that's it for today. Cheers.